Everyone loves to tell you Algorand is an abandoned network. You look at the price action over the last 2 years, and honestly, on the surface, it's hard to argue with them. We are sitting at 13 cents. We are below every major moving average. The sentiment is at absolute rock bottom. But if this project is truly finished, why did 21 million active wallets interact with it recently? Why is the foundation packing up their entire operation in Singapore and moving their legal headquarters back to the United States right now? And why is ProShares quietly slipping Algorand into their latest ETF filing with the SEC? See, most people are looking at that 13-cent price tag and seeing a failure. I'm looking at the same price tag, layering in the Heikin Ashi RSI signals, and this sudden institutional pivot to the US, and I see one of the most asymmetric risk-to-reward setups in the entire market. If we lose the 8-cent level, I'm wrong, and I walk away. But if this weekly structure holds, the upside variance is massive. Let's look at the data. For context, we are sitting on a historical support shelf that has defended this asset since 2023. Every time we have dipped into this zone between 9 and 13 cents, buyers have eventually stepped in. The market sentiment is fascinating right now. You have the Algorand Foundation tweeting that 2026 will be the year of Algorand, which usually I would dismiss as standard marketing noise. But then you look at the macro landscape. We are seeing a rotation where capital is starting to sniff out undervalued layer 1s that have actual utility but have been suppressed by regulatory fears. This is why we are talking about this today. We are not chasing a pump here. We are analyzing a bottoming formation. The price is quiet, the volume is low. This is exactly when you want to be doing your homework, not when the candles are already vertical. We have a specific technical confluence on the weekly chart involving the Heikin Ashi RSI that we have not seen in 3 years. But before we get to the charts and my specific trade setup, you need to understand the fundamental shift that's happening behind the scenes, because the narrative for Algorand has completely changed in the last week. The biggest criticism of Algorand has often been its tokenomics and its positioning. But look at the sequence of events from just the first week of January. First, the geography. The Algorand Foundation officially announced they are moving from Singapore to Delaware. They are coming back to the US. Now ask yourself, why would you do that if you were worried about the SEC? You wouldn't. You do that when you are confident in your regulatory standing and you want to be accessible to US institutional capital. This connects directly to the second piece of news. ProShares Trust just filed with the SEC for a new basket ETF. And guess what is listed right there alongside Avalanche and others? Algorand. Connect the dots here. They move to the US, and ETF filing drops immediately after. This is not a coincidence. This is positioning. Stacey Warden, the CEO, even went on the Schwab Network, mainstream financial TV, to talk about this. She explicitly mentioned that ETFs would be a major theme for 2025 and 2026. Then you have the tech angle. While everyone is panicking about AI and quantum computing breaking encryption, Algorand is leaning into it. They are already integrating Falcon keys, which are quantum resistant. Stacey noted on air that they are already quantum secure in their history. In a world where institutions are terrified of future security threats, being the quantum-safe blockchain is a massive selling point for high-value settlement. And it's not just talk. Look at the adoption metrics. MarketCoinpedia recently ranked Algorand 5th among all cryptocurrencies by the number of active wallets holding a balance, over 21 million addresses. That is more than USDC and more than XRP. Finally, they are integrating with Brawl for regulated stablecoin issuance. This brings compliant, fiat-backed stablecoins directly to the network. So the fundamental thesis is this. Algorand is pivoting from a retail-focused tech chain to a US-domiciled, regulation-compliant, institutional-grade rail. And the market has priced it like it is going to zero. That's the disconnect I'm looking to exploit.
Now, let's strip away the news and look at the cold, hard truth on the weekly chart. I'm looking at the weekly time frame because for an asset like this, daily noise is irrelevant. We are looking for a macro shift. First, the trend. It's undeniably bearish in the short term. We are trading below the 10, 21, 55, and 100 EMAs. The price is battling with that 10-week EMA right now. Until we reclaim those blue and purple lines, the trend is down. However, look at the structure. We have an ascending trend line connecting the lows from late 2023 to the lows we just put in. We touched this orange dotted support line perfectly in late 2025, and we bounced. We are currently sandwiching ourselves between that ascending support and a descending trend line. the white dotted line on my chart, that has been pushing price down since July 2025. We are squeezing. The breakout point for that descending trend line is around 16 cents. Now, look at the volume profile on the left. The point of control, the price level with the most traded volume in this entire range, is sitting right at 11 cents. We are trading at 13 cents. This means we are building a massive base of support right below us. This is a solid foundation. If price drops, there is a lot of historical volume there to absorb the selling. But the most compelling signal for me is the Heikin Ashi RSI at the bottom of the chart. This indicator has dropped into extreme oversold territory, the lowest levels we have seen in 3 years. Look at the green circles I have marked. The last 3 times this indicator got this crushed and started to curl up, Algorand rallied. After June 2023, we saw a 200% move. In 2025, a 111% move. And before that, a massive 420% rally. We are seeing that same curl right now. The momentum is resetting. It doesn't guarantee a moonshot, but it tells us the sellers are exhausted. We also have a local resistance at 22 cents, which aligns with the 236 Fibonacci level. I anchored this fib from the high of 61 cents back in December down to the low of 10 cents. If we can clear 22 cents, the next major friction is not until 29 cents. Breaking 29 cents would be a higher high, and that effectively ends the macro downtrend. So here's exactly how I am trading this. I'm treating this as a high-conviction swing trade with strict invalidation. I have established a load zone between 9 and 13 cents. This is the green box on my chart. We are still in the upper bound of this zone. I'm comfortable accumulating here because my invalidation is clear and tight. For my stop loss, I have it set at 8 cents. That is the red dashed line. Why 8 cents? Because if we close a weekly candle below 8 cents, we have lost the ascending trendline structure and the major low from 2023. The thesis is broken. The higher low structure is gone. At that point, I'm out. I'm not marrying the bag. This represents a risk of roughly 30 to 40% from current levels, so position size accordingly. Now for the upside. If we get the rotation I'm expecting, I'm scaling out aggressively into strength. Target 1 is 20 cents, which is psychological resistance. Target 2 is 30 cents, as this clears the recent highs. Target 3 is 40 cents. Then we look at 60 cents, 90 cents, $1.40, and finally $2. The darker green circles on my chart, specifically around 40 and 60 cents, are where I plan to take the heaviest profits. My strategy is simple. If we hit 20 cents, I move my stop loss to my entry price. I eliminate the risk. If we hit 30 cents, I move the stop to 20 cents. I trail the profit. For my long-term portfolio, I keep a small allocation, about 2%, that I'll hold regardless, just in case the ETF narrative sends this into price discovery mode in 2026. But for this specific trade setup, I'm playing the levels. To bring this all together, we are betting on a convergence of factors. The bull case is that the US move and ETF filing act as a catalyst. The Heikin Ashi RSI confirms a momentum bottom, and we break the descending trend line at 16 cents. The bear case is that the general crypto market dumps, Algorand loses the 10-cent support, and we close below 8 cents, invalidating the setup. The risk to reward, here's what attracts me. The downside is defined. The upside, if we just return to the mean, is over 100%. If we actually enter a bull run, it's significantly higher.
Algorand has been boring for a long time. It has been painful for holders. But boredom is where bottoms are built. The foundation is making the right strategic moves by going on the offensive in the US, and the on-chain data shows a network that is far from dead. I'm placing my bet here at the bottom of the range, not waiting for the top. If you found this analysis helpful, do me a favor and hit the like button. It helps the algorithm find more people who care about Algorand and data over hype. Make sure you are subscribed with the bell on. Also, markets move fast. If you want to see exactly when I'm entering or adjusting this trade in real time, join my free Telegram community. The link is pinned in the top comment below. I post my charts and ideas there daily. Thanks for watching, and just a reminder that this video is for educational purposes and I'm not a financial advisor. See you in the next one.